Tick tock, the bell's gonna ring. Marcus dance, it's a wild, wild swing. Grenade with the final call. Chasing dreams before the curtain falls. Options rise, options fall. Risk it big and not at all. Closing playbook, flip the page. Endless numbers set the stage. Gains and losses side by side. Ride the wave, don't fight the tide. Closing playbook, time to play. Grab your chance, seize the day.
All right, that's what we got going on for the closing playbook theme song so far. I hope you're enjoying that as we try and make that into something a little better.
That's our like free teaser or whatever.
Yeah, something like that. Yeah.
Nice. All right. Well, I accept, Dave. It's better than no jams whatsoever. Everyone, hope you all are doing well. So is today? Wait, what's today? Today's Wednesday already.
Today's hump day.
Wow, that's crazy. We're sitting on Wednesday already. Seems pretty crazy to me, but here we are, another boring day in the stock market. Just another ho-hum, nothing happening in the stock market. And of course, I'm being sarcastic because this market is getting absolutely wild. But I think it's awesome. I think there's so much opportunity. In fact, I was talking to Alex, who I'll go ahead and bring on right now. Hey, Alex.
What's up?
I was talking about, hey, let's cover a couple trade ideas, then get into a quick training that he has. There's honestly so many different things that I want to trade right now, just because it's so interesting across the board. I think my default right now, and I'm curious your take. I think my default right now is to keep rolling some of these quote unquote catch up trades, some of the stuff that just when we have a big day like this kind of lags behind, and see if it'll fill the gap a little bit. Like Bitcoin right now is lagging, and I think I already have a lot of Bitcoin positions, so I don't want to be overly aggressive, but I just think in this melt up environment, that's going to come in waves, and we'll see Bitcoin make another rip. So I like that. The other one that I think is kind of interesting. We talked about staples earlier, so I won't go down my whole diatribe on staples and some of the fun little trades you can make there on those boring stocks. But I think financials is lagging a little behind right now, especially as I expect really good earnings to come across the board in financials. We're at 53 right now. The high's at 54. So we're only 2% off the highs. Obviously, nothing crazy. But typically, you would expect financials to help lead the charge across the board. So I think that's an interesting one. And there's a whole bunch of other plays out there as well. But I think I'm gonna zero in on Bitcoin as my aggressive trade, and then I also might try another SPX stab in the dark for the last 10 minutes of the day, just because I'm kind of having fun trying to figure out if there's a way to get on the right side of those. It's actually pretty similar to what we talked about. So you're gonna, I think, tell people at some point about the NDX idea that you started messing around with.
I'm about to say,
which is pretty crazy. What I tried to do the last couple of days is figure out, can I do like a super aggressive version of that, where if I can just catch 5 minutes of correct direction on something like the SPX, it can flip from 0% to 150% in literally one minute candle, because you're going from completely out of the money to completely in the money on literally a 1 minute candle versus something traditional that's like XLF. You're trading a dollar spread. Well, that's a 2% move. On SPX, it's a 0.05% move, and so you can cover that ground. So I think that's where I will settle on today for our live trading action. Let me give you the IBIT trade that I like first. I'll go ahead and share my screen here.
Yeah, I like that. It's an interesting. I usually play. I like the catch up trade idea. I never actually when we have red days like this, I feel like the ones that the stocks that are strong when we do recover just go stronger. But I like the catch up trade idea too.
This is one of those environments where I think if you are consistent, you are going to have a ton of opportunities. In other words, what I mean by that is we're going to have a lot of updates. We're going to have a lot of momentum. We're going to have a lot of green out there, in my opinion, all of Q4. And then we're going to have some really ugly flushes. And I think they're going to be like 2% in one day and, 3% in 2 days, that kind of stuff. And so my opinion is that if you're someone who the market gets really hot and then you jump in, then you take a beating and then you go on the sidelines and then it runs away without you and you jump back in and you catch it wrong. I think this kind of market can be tough because it's really easy just to get on the wrong side of that cycle. But I personally think it's such a good market that if you're consistent, you're going to take some lumps on those ugly days, but you're going to have a lot of green days that you can jump right in and take advantage of. So that's really my approach, is not to look at what I think is going to happen a week from now, but to say, hey, I think that, Q4 is a really good environment. We have some of the long-term positions you guys know about, AGQ, IWM, that are ripping, but on the day-to-day basis, really is for me just a swing the bat environment. Swing the bat, get in there. I think you're going to get more good days than bad days, and frankly, that's all you need to do really well.
Yeah, I love it.
All right, let's look at IBIT. This is a 2-day trade because it is Wednesday. I was thinking it was a 3-day trade because I was thinking it was Tuesday, but it is a 2-day trade because we are already into Wednesday, and we're just going to look at a little move here, just a 80-cent move on IBIT, which is 1%, I guess 1.2%, which is obviously nothing on Bitcoin. Looking for that move over $64 in the next 2 days. Can Bitcoin rally 1.2% between now and Friday? I think yes. I think we have the conditions right now. We're just kind of rotating with risk on. And I think Bitcoin will get a piece of that pie in the next couple of days. How do you trade that? Well, the way that I like to do it is to do this debit spread where the default is a 50-cent spread. I like to do the full dollar spread just because less contracts, less fees. And we can do this right under 50 cents. So guys, that's a coin flip trade. It's 100% ROI if we're right, or a little bit extra. I'm going to try to get in a little better because frankly, 50 cents is actually not amazing pricing here. Why is it not amazing pricing? Well, because it should be 50 cents if the price of IBIT is 63.50. In other words, if it's right between that strike, then it should be 50-50. But with the asset like Bitcoin or something like Tesla or something like NVIDIA, you're not going to get the best of the best pricing because the market makers know, listen, 1% move for this thing is nothing. We're not going to pay you those extra pennies on the spread for being perfectly in the middle. So I'll try to get in for 47 or 48 cents. I'll have 105 or 110% ROI potential. And for me, the idea that all I need is Bitcoin to move 1% in the next 2 days or finish 1% higher in the next 2 days to be a double up, that's a good enough ROI for me. So that's what I'm going to do, 63, 64, and I will throw it in the chat here for you. I'd open October 17, IBIT 63. By the way, you can do the 50-cent one if you want to go cheaper, but I like the full dollars. Just less contracts, less overall fees.
You typing it or you need me to do it?
Call. What's that, Dave?
You're typing it or you need me to do it?
No, I got it. October 17, IBIT. $64 call.
Can I drop a trade in today too?
Absolutely. Well, your last one didn't work out though. They only made 120%. So I don't know if you're. I don't know if you're allowed. Debit 48. No target here. I'm going for the full enchilada. I'm going to throw it in for 48. Actually, I'll start at 47. See if I can get filled at 47. Just a couple contracts for me. I'm already loaded to the gills on IBIT, so I need to be careful how much more I stack on right there.
Max risk. Full port, the whole account.
Yeah, the whole account. The other one I like, by the way, is XLF. I think it's in a good position, and I wouldn't hesitate for that. But maybe we'll do that one tomorrow. I will leave you with IBIT. I'll crawl that up to 48, 49 cents to try to get filled, and I'll let Alex jump in here with the trade.
Okay, so I'm looking on my scanner here. I guess I can go ahead and share my screen. Where's my screen? So I'm looking at my scanner here. These are like the late day flows we've been doing. The last one that was Wolf that I shared, I think was Wolf.
Mhm.
No.
Yeah.
Oh, sorry. I thought you were asking if you shared your screen. No, you haven't.
Not yet. Boom. All right. So I'm seeing some SMCI calls come in. A little bit of puts. But you see these. There's a lot of 57, 10, 24s. The big contracts are coming in at 57, 10, 24. You see repeated hits ascending fill, which is a good one. So I kind of like this trade for an overnight, because if you look at the chart here, we're still over the 9. We've had a pretty good rejection of like what they were trying to push it below that, the sell off today. I think we're kind of like a coiled cobra about to snap higher. I actually didn't open up my chat, so I can't type this in. Let me go and open up my chat for everyone, so I can type in this trade here as we head into the end of the day. My name is Alex. All right, so we're gonna go SMCI. Oh yeah, buy to open, SMCI. Let's go 24th October 25. We're gonna go. Let's see what that $57 call is at right now. It is at $1.38. So I'm seeing if there's any other contracts that might be cheaper to do. Is there any other strikes here? 57. There's a 56. That's going to be more expensive. 55 is going to be more expensive than that. Let's see. 57 is $1.38. We could actually do. It doesn't. This is a directional play. So basically, at 57 or 54, we basically need it to go $3 tomorrow, but not even like $3. You don't really need to go all the way up, but even if it just rebounds a little bit for us, we should be able to get a pretty good overnight gain. And I'm trying to think. Okay, we'll go. Let's go the $57 call, since we are seeing that. We can get in for see if we can get in for 140. $57 call. See if you can get in at like 140. Set it at 143. See if you can, but go up to like 145. See if you can get filled a little better on it. I'm gonna start at 143. Oh, yep, I got filled at 143. Don't accept the mid price, ladies and gentlemen. Never accept the mid price right off the bat, because you can also oftentimes get filled in better than that. All right. So, boom.
Nathan preaches that every day.
Oh yeah.
No, it makes such a big difference over time.
It does. Yeah. And if when you enter a position, like nothing goes straight up. Sometimes things do go straight up, but like sometimes there's gonna be a little bit of sell off, a little bit of consolidation, and then before a move higher. Psychologically, it's way better to have that cushion. If you entered at like 145, if you enter at the mid price, it moves a little bit to the other direction. Now you're already down. You're like, oh, now you're maybe starting to sweat because it's, you entered a position, you open it, it's immediately down. If you can get in for under the mid price, it can still have a little bit of change, but you'll still be in profit. And that's really psychologically is really helpful for me. I think for a lot of people.
Yeah, and then the other thing, like I was saying earlier, I trade almost all spreads. So when you're trading a spread, you have a max profit, right? If you're trading a $2 wide spread, it can only ever be worth $2.
Right.
If you pay $1 for it, your risk to reward's 1-to-1. But as soon as you pay $1.20 for it, now your risk to reward is all out of whack, because you're not just paying more, you're also taking the profit away from the potential value of the trade. So I think it's it's one of those like little things that I'm sure traders don't get excited about talking about, but it's super important, especially over time. You stack that up over 1,000 trades in your career, it's gonna be a big number.
Oh yeah, for sure. Do you get filled better than mid prices on the spreads? I never seem to be able to get filled that well lower. That's cool. I'm gonna start trying it to be more aggressive with that.
Not like super often on something like NVIDIA or SPY, but like a lot of times on something that has a little less volume. What was the one we did earlier today, Dave? I gave one and I started like 5 cents below and it filled. Yeah, Coke. Yeah. Coke, I started like 5 cents below the mid price and it filled within a millisecond. I was like, oh, I should have, probably still overpaid. Could have started 10 cents. So I think it depends somewhat on the instrument.
Heck yeah. That's awesome. What's up, Graham?
Hey, what's up, guys? Nate, sorry, I'm a little late. I was on a call. It went a little long. Did you see SLNH since this morning?
Dude.
Did anyone get SLNH this morning from the opening playbook?
I am in shock with what I'm seeing right now.
The underlying stock is up 52%.
Oh, wow. Well, is this a crypto? Soluna Holdings? Sounds like it.
Yeah, it's my secret insider Dave. Another one of his picks. I think
Alex, we don't know what these tickers are or what they do. We just know that Dave texted.
I literally said this morning. I said I have never heard of this stock before. I don't know the first thing about the company, which is a great start to an investment. All I know is that my buddy Dave, who has been giving us winner after winner after winner here, he texted me last night and said this is the next one he's doing.
Oh,
Well, I thought as long as you don't claim to be a fundamental trader, you don't have to worry about what the stock
Yeah, that's
is.
true. This is a highly unprofitable company.
yeah. Well, that's all the companies now, man. Oklo, no money, $140, same price as like oil companies.
I don't know if you guys saw. You wouldn't have seen it. I saved a stat to show you guys. I am not a huge squeeze play guy. When the whole GameStop thing happened, I kind of rolled my eyes the whole time, like this is ridiculous. And then, of course, I wish I partook in it. High short interest names over the last 5 years are up 500%. If you did high short interest names, the S&P is up 100%. So it's outperforming the market 5x. I guess this is all part of the melt up, right?
Yeah,
that's crazy. That is.
Yeah, I love it.
Anyways, what are we trading today? I'm late.
I did Bitcoin again. I said I can't stay away from it. Every time it's like lagging and it's red and we're getting these massive days, I just think, oh, it's probably going to catch up here and have a little overnight or 2-day move. So I did another stab on Bitcoin. I've got a couple things open that I won't beat the dead horse on that we've talked about a million times with the AGQ and the VIX short trade, which those are looking pretty great. You have anything to throw into the mix, Graham? If you have another stock that's going to move 50% tomorrow, please let us know.
I need to ask Dave, huh?
Hey, look, you think that's impressive? Very, VERI, 52% on the day.
Wow, that's
crazy.
Yeah, are they the same company? They're both up the exact same amount.
Yeah. Heady times.
Yeah.
Oh, it's an AI stock. If anyone was curious, you just put AI in your tagline, put it in your Twitter bio, and your stock triples.
Yeah, it's pretty wild.
I'm an AI trader. Will my portfolio triple?
Yeah,
52% tomorrow.
One of the things that I am bummed about is, Graham, I tried a lotto pick on SPX at the end of the day to see if I could get one of those, that flips from out of the money to in the money in the last couple of minutes. And I did the 66, 65, 66, 70, but I didn't get filled. So I must have missed it. I pretty much went right at the mid price, still didn't get filled. Must have missed it by 5 cents. And it would already be up over 100% right now. So the concept is there, just a matter of dialing it in,
Yeah, Nate, I have on my notes today, I wrote down what we could do each day. Wednesday. Oh, earnings. Did we look at earnings today?
I looked yesterday for the whole week, and there's not a ton today. But Alex actually said that he was going to do something a little special for us on the options chain, because he was saying by this time next week, people are going to have access to that scanner for those free ride trades. And of course, he's going to be giving them lots of picks, but they're probably also going to want to find some of their own trades. And so to prepare them in advance, that's the kind of guy he is, to prepare them in advance, knowing they're going to want to make sure they understand the options so they can take the plays. He did a little how to read options, how to figure out how out of the money you want to go, that sort of stuff. So I was going to let him run away with that as soon as we got done with our live trade ideas.
Sounds good.
Yeah. So
Vladdy says Dave should get a raise. I think Dave should just become a full-time trader at this point. Forget the raise.
Yeah, AI. It's crazy. The real Dave Mound has been trapped in my closet for the last couple of months, but the AI Dave is just crushing it.
That's amazing.
We've built the model very well.
All right, let's look at some picks here. We got Taiwan Semiconductors in the morning. Little fun tidbit for you guys. TSM is the ticker. We've traded this one a few times, and I don't know if I cut anyone off there. I didn't mean to if I did.
You good?
This is the one I wanted to share with you guys right now. Let me share my screen. Should be able to see my... Oh, I didn't post it. Here we go. Should be able to see my screen now. TSM's a ticker. We know that this has been a seasonally strong one. We've traded it a few times, made some good money on it. This is one of those weird ones that Q3 earnings for the last 10 years in a row, they have beat quarter 3 earnings 10 years in a row. And by beat, I don't necessarily mean like their EPS outperformed their expectations. I mean the stock went up on earnings for 10 years in a row. So with that in mind,
So we're going for an 11 in a row is what you're saying.
we are going for 11 in a row. We don't know if this is going to happen. It's just one of those odd pricing anomalies, a data point here that we can kind of play off of right now. I'm going to use the weekly options here on TSM. They're expected a 13-point move tomorrow, which would put it close to about 317.50 strike price. So if you wanted to go for the max move, I'm going to give you a couple different options here. I'm not going to go for the max move. I'm going to try and slide in between the market maker move here and go for over 100% return on investments. This is going to be about a 6-point move here, about half the market maker move. Let me type it up for you guys. TSM is the ticker. I'm going to buy the 17th of October. I'm going to buy the 310 call, and I'm going to sell the 17th of October 312.50 call. This is at a debit of 90 cents right now. Here we go. Post in the chat. Let me know if I made a typo. I'll go ahead and get a few of those. Let's see if I can get filled at 90. If not, I'll go ahead and adjust. So this, I'll filled right away at 90. 250 is our max selling point here. It's 177% return on investment. If we're right, TSM does need to jump on earnings, right? We know it's beat it at the last 10 years in a row. So it just needs to be above 312.50 by Friday. So if you see my crosshairs here, right at my crosshairs there, if it's above that price, I make 177% return on investment. The reason I like these odds is when we are playing earnings where it's essentially a 50-50 coin flip, hopefully better than that right now with the historic evidence we have. But even if it's a 50-50 coin flip, if we make over 100% on our winners, then we average out net profitable. So that's kind of the thinking here. Hopefully, maybe this was last year. This is the earnings event last year. So I told you, listen, I'm just going to show it to you here. Last year on a chart, 16th. So one day from today, but 16th popped on the 17th. That's a nice what? Oh man, that was a good one there. $15, $20 move for the stock. So that's what I'm playing here. TSM for you guys. It's in the chat. If you want to go more speculative, just shift your strikes out. If you want to go for the full market maker move, you can do 315 and 317. That's at 68 cents right now, which means it would pay 267%. If that one's right. You could wrap it, but again, I like going a little out of the money because we are not necessarily we're truthfully a 50-50 coin flip. Hopefully a little bit better knowing the data.
Hey, man, any 50-50 coin flips where I can make 200%, sign me up all day long.
Yeah. That's how I like to think about it.
Heck yeah.
Oh, nice job, Cynthia. Yeah, this was a weird day in the market. Someone asked about 60 Minute. I'll show you 60 Minute.
Yeah, I was going to say, I feel like the SPY or SPX day trading would have been great today.
Yeah, we had calls in the morning. It didn't work out. As you can see here, which happens, guys, if you believe it or not. We did just come off 5 winners in a row. So hopefully 5 for 6, we can feel pretty good about that.
I think you're all right at 5 for 6.
Yeah.
Those ones are always tough. We talked about this before. If you're a mechanical kind of systematic trader, like I am 95% of the time, and you get, buy signal as the market is rolling up, it's always hard to kind of keep clicking the button. Like, oh man, the market feels overheated. And like maybe we should back off. I would advise you guys, when you go back and look at the data, that is almost always a bad decision. It's when you've won 3 in a row and the market, is up higher and higher and higher, and think, oh, it's too high. Maybe we should cool off. That, you go on a 15 win streak and you're like, oh shoot, I really should have stuck with it. And then you take the 1 loss or the 2 losses at the end of the win streak and you're still net ahead. But kind of like what I was just saying to Alex before, if you try to like get too cute and manage it, us retail traders don't do a great job of that. So yeah, I know exactly that feeling. Obviously with overnight options, I've had some of those moments where it's like, oh, it feels too high, but you just follow the system, you click the button, and that's why you have the odds. So I think, 5 or 6, you can feel okay about that.
Yeah, I'm very pleased with that. No complaints at all. If you guys like to just look at the basic support line, I noticed Apple earlier today forming a nice little higher swing low. So we have the low swing here, went higher, higher swing low, went higher, came down here, higher swing low. Looks like a really good buy for Apple, in my opinion, right now. And we still have some time before earnings. So if you want to trade Apple, maybe even look at, actually on my list today, I'm just going off the fly here. On my list today, Nate, was to set up an auto target trade. Maybe I can do that on Apple.
We do our weekly spreads on Apple and Cash Flow Club. So
nice.
Hopefully it keeps on going higher.
I love it.
We took a put spread this week.
Man, these options are expensive right now.
Yeah, Apple's been a pretty solid stock since we started getting,
All right,
interested in it.
I'm going to give you guys a trade on Apple. We're going to buy the 24th of October 250 strike call, and we're going to sell the 24th of October. So that gives us 10 days, 252.5 call. This right now is a net debit at 104, but what I'm going to do, I'm just going to say 105. It just moved on me. I'm just going to say 105. Let me just go ahead and see if this will fill. Okay, filled at 105. I'm just going to set a good till canceled target for 50% gain. Similar to what Nate does. I'm knocking them off here. I put us at 158. So GTC target 158. So that this is actually going to move pretty quick. If Apple gets a nice little pop here over the next couple days, I mean, even a 1% pop, I would not be shocked to see this get pretty close to hitting 2%. You're probably there. But we're just going to set that closing order now so that if it hits that price point at any time during this trade, we can get our 50% profits. Now, remember, set it as a limit GTC. It means good till canceled. Go ahead and throw it out there. Now, this gives us 10 days for Apple to make a decent move higher. And I love it how it Thinkorswim will show it on the chart. So here it's saying if this very second it hit 254, it would probably fill. This should decay over time to about this point on my screen. Let me see where 1024 is. Actually, almost right in line with this trend line. So I like that one a lot on Apple. TSM, target on TSM, I would either look to take profits in the morning if it's up nicely or look to hold it till Friday. The one gamble with holding till Friday, and this is why I wish they had daily options on all tickers, is it could fade. It didn't really fade there in the past. Let me find an example. Oh, like here. So here's an example where it beat earnings and then the next 2 days faded. So that's why it's always safe to take profits in the morning. If you want to go for the full profit, you just hold it through the end of the week. All right, did I cut anyone off?
No, I think we're good to go. Alex, you want to kind of flip into what you want to cover? I mean, I thought this is just a good idea to give people who especially might be a little bit newer in the options world. He said, hey, maybe I'll just give them a run through of how to understand the options chain, what to look for, especially on the heels, like we said, of a whole bunch of people are going to be getting access to that scanner very, very soon, especially if you show up Sunday night and you don't miss the window. Sunday night at 7 p.m. Actually, why don't we drop that link, Dave, just in case anyone is not signed up yet for Sunday night? That's going to be sweet.
In the announcements below the presentation, just scroll down. It's been there all day for everybody.
Woo. Yeah, sign up for that.
Alex's Telegram and Alex's Sunday night session sign up.
Okay, well, I might. Okay, there it is. See, you act like it's easy because you know how to read, but some of us.
I only see
I was talking to the smart audience, not the.
All right, I'll post it.
Host.
I'm gonna post it in the chat there for those of us who are more like me, Dave, who need help.
Yeah, so I'm really excited to launch this thing. I'm gonna be flying down, hanging out with Graham there in his office right there.
It's gonna be a blast.
Yeah, it's gonna be really fun. Again, 7 p.m. on Sunday. Now, the thing is this scanner is options. We trade options using this scanner. So you need to know how to trade options, which is why I thought this would be a good idea just to go through some stuff about the options chain, how to read an options chain for noobs. But also, if you're new, but also if you're more experienced, I think you're going to get something out of this because the options chain is really, really dense with information, and it shows you a lot about trading. Spend a lot of time there, and I think you all probably spend a lot of time in it already. But with the scanner, you're going to be spending even more time in it. So let's go ahead and get into it. So first off, what is an option chain anyways? Well, it's a list of all available call and put options for a stock at different strike prices and expirations. Now, this shows real-time data for pricing, volume, and open interest, and a ton of other things, which we're going to talk about. You can think of this like your trading roadmap. Like you can see so much stuff from an options chain. It really is a roadmap. Now, that being said, you got to know, and there's the market close. That being said, you got to know how to navigate the map, right? What do all the map icons mean? Well, on the left here, you have the calls, and on the right, you have puts. Calls mean you think the stock is going up. Puts you think that means that you think the stock is going down. Now, in the rows here, you can see on this red boxed in stuff, these are your strike prices, different strike prices, 41, 41.5, 44, 44.5, all that jazz. Now, the columns will show you a ton of stuff, including pricing, open interest, volume, Greeks data. You can see the Greeks right here. This is all on Thinkorswim, by the way. I use Thinkorswim, so all the screen caps are from Thinkorswim. If you use another brokerage, they're going to have the same information. They might look different. They might be in a different place. The interface might be a little different than this, but it's all going to have the same information. So these concepts you learn can apply to whatever brokerage you're using, right?
Are you able to zoom in on that a little bit, or is that just a slide?
It's just a slide.
Okay.
Can I zoom in on slides? No, I can't.
Yeah, we can see it, but it's fine. Don't worry about it.
Okay, cool. Yeah, I mean, this is, you don't have to see like specific numbers, just like the general stuff.
Yeah.
So first off, maybe one of the most important columns is the bid ask, because when you're buying an option, right, and selling an option, you need to buy low and sell high. That's the whole concept, right? And so the bid and the ask is basically the price of the option. The bid, right, you can see here in this column, is what people want to pay, and the ask is what sellers want to receive, what they're selling the option for, right? It's a marketplace. You can see here on this Peloton, the bid was 14, and which means buyers wanted to buy it at 14, and sellers wanted to sell it at 18. So when you hear about mid price, it's the mid price between those two numbers. And it's the same on the put side too. The bid and the ask is both on the call and the put side. Now, the reason why I love the options chain is that it not only tells you options information, but it tells you underlying ticker, underlying stock information, right? Which is why it's a perfect roadmap. It's so information dense. You can see up here the underlying price of the ticker, in this case Peloton, right? When I took the screen cap, it was trading at $7.30. You can see how much volume has been traded on the underlying ticker, how many shares, right? Forget the contracts. How many shares have been traded on the underlying Peloton today? Now, if you go down here and you can also see the open, you can see the high of the day, you can see the low of the day. And if you go down here, start delving into the columns, this is open interest. This is how many contracts basically were opened and traded the day prior. So this is Wednesday. So let's just say I took this on a Wednesday, right? These would be the contracts traded at these strike prices on Tuesday, open interest, right? Volume is how many contracts have been traded today. So that's a key distinction. Keep that in mind. We're going to go into that more in a second, because volume and open interest are super important to me and the way I trade and the way the scanner works. Again, volume is activity today. Open interest is activity yesterday. So when you see high volume plus high open interest, right, that is a liquid tradable option. If you look at Apple, Graham was just talking about Apple. If you go to Apple, you're going to see a ton of both open interest and volume, basically at any strike you want, every single expiration. You can see it here, a ton of contracts. You can see it on the put side too. Now, if you go to a lesser known ticker like Peloton, a smaller ticker, sometimes you'll see high volume and low open interest. What does this mean? This is a key thing I look for. So basically, again, if you think about open interest being contracts opened yesterday at this price, contracts open today is volume at the same price. Why were so many new contracts open today when there was such little interest the day prior, right? If the 2,402 contracts opened on Peloton today, but there's only 385 opened yesterday and traded on it yesterday. Well, that can often mean there's new activity about to unfold on the underlying potential smart money move, right? Now, let's get into the Greeks. Don't worry. This is just an overview of them. Delta is the first one I want to look at. Now, delta is the sensitivity to stock price. It basically is how much a stock, the options price moves for every corresponding $1 move in the stock. It's also probability in the money proxy. So I'm going to get into more about the price change sensitivity, but you can use this, especially if you're selling spreads. So basically what you see here, let's go down to this $8 call on Peloton. If you were to open that option and just buy it, you'd have a 15% chance of it finishing of Peloton finishing at $8 by expiration, right? So this was taken last week. So last week when you opened it, you'd have had a 15% chance of Peloton hitting the strike price of $8. Now, conversely, if you're selling, right, you have what would that be? 85% chance of it not hitting that stock price. So if you're selling, you don't want it to hit the stock price. So that's why you can use it as an in the money proxy and a probability proxy. So again, delta is the rate of change of the option. So if delta is 0.5, the stock moves $1, the option gains 50 cents in value. So here, if Peloton moved $1, we have a delta of 15, right? It would gain this option right here would gain 15 cents in value when Peloton increased by $1. The next Greek is gamma. Gamma measures how much delta changes when the stock price moves $1. So if gamma is 0.05 and delta is 0.5, after a $1 move, delta becomes 0.55. In other words, the option gets more sensitive to price changes. This is why you can see without gamma, there would be no change in the price because there'd be no change in the delta here. You can see here on an at the money, right? It's 79. How do you get from 15 delta out of the money to 79 delta when it's at the money, or a one delta when it's in the money? It's because of gamma, right? Because as the price increases, the acceleration of the delta increases too. When you think of delta like the speed, again, gamma is like the acceleration. The next one is theta, which theta is super important too. I'd say it's maybe the second most important Greek to worry about because it's time decay. Every time you buy an option, you're basically losing money on it. The minute you open it, just for holding it, that option's value is decaying. You can think of it like the rent you pay daily just to trade that option. Theta is expressed in negative numbers because it's a decay measure. So if theta is negative 0.06, the option's price will drop about 6 cents per day. If we were isolating it, there's other factors. There's all the Greeks, come in together to work together. But if we're just isolating theta, that's what it would be like in a laboratory experiment, right? The next one is Vega. Now, Vega measures how much the option price changes for every 1% change in implied volatility. We've all heard about implied volatility. Vega is this column you see here. And when I took this, it's 0 for Peloton. We're far away from earnings. But especially as we were to approach earnings for a ticker, you'll see this Vega measure tick up. Now, if Vega is 0.1 and IV rises by 5%, the option increases by about 50 cents. You take the Vega measure, you multiply it by the percentage change in the IV, and you get that 50 cent mark. Now, Vega is going to be strongest for at the money and longer dated options because it's how sensitive your option is to volatility swings. Now, there's also another one, Rho. I don't care about Rho. This is measure sensitivity to interest rate changes. I don't know anybody who cares about Rho. I'm sure bond traders care about it, but for us, all intents and purposes, you'll never think about rho in your life. Implied volatility, right? So this is a key thing. Now, I mention this with the Vega stuff. What is implied volatility? Because this is really important. Implied volatility represents the market's expectation of future price movements. So you can see here on this little options overview that I think this was for Peloton. Implied volatility is 85%. Where you're like, oh, wow, 85% implied volatility. That sounds really high, doesn't it? Actually, Peloton's a pretty volatile ticker. So if you come up here, you see the current IV percentile, right? The current implied volatility percentile is only 33%. It's only in the 33rd percentile. So it's actually not that high, right? Comparatively to what Peloton can do. Now, higher IV equals more uncertainty, which leads to pricier options, while a lower IV equals a calmer market, and that leads to cheaper options. Now, how? Why is this? Well, let's look at how IV affects price via that Vega Greek we talked about. When IV rises, option prices increase because, again, go back to that formula we had. Vega adds value. And when IV drops, option prices decrease because the Vega will subtract value in that case. Let's look at an option that has a Vega of 0.12. Let's say IV falls by 10% after earnings. The option loses about $1.20 in value. You take the Vega measure, you multiply it by the percentage, so you get that 120. Now, think about that. You've lost $1.20 on that option just via IV falling. That's kind of hard if IV falls to make money on an option, right? Well, we're going to talk about, why that is. This is called the IV crush effect. Now, it happens after big events, right? Earnings are the one you're going to hear about the most, but it can also happen after Fed meetings, other big events too. Maybe this Trump Xi meeting in 2 weeks is going to lead to higher IV as we wonder what the trade deal is going to be or something. But before these events, because there's uncertainty around the events, IV is going to spike. It's going to go up. But then, hey, turns out Fed's not cutting interest rates, or they are cutting interest rates, or they're raising. Whatever they do, or they announce a trade deal at the summit between the U.S. and China, they don't. But whatever, that uncertainty has been sucked out of the market, right? So the volatility gets sucked out too. It collapses. This crushes the option value even if the stock barely moves. So that's why playing puts and calls before earnings will oftentimes, more often than not, the vast majority of the time, lose you money, even if you're right on the direction. Even if the stock moves to your strike price, right? Remember, you're losing so much value in that option just because IV is getting crushed that you might not make any money. You might make only a fraction of what the profit diagram showed you can make. You actually might lose money even though you were right. So that's pretty crazy. IV is super important to understand when you're trading options, especially when you're trading options around big events like earnings or Fed meetings or whatever. Now, put call skew is another thing you'll be able to see in the options chain. Skew describes how implied volatility differs between puts and calls at different strike prices. So higher IV equals higher prices, again, hammering that home. Now, in simple terms, the put call skew, this means puts usually are going to cost a little more because why? Big money is always hedging risk. So if you look at this Apple chain here, we're at the same distance away from the at the money strikes, 257.50. We're about 2 strikes out of the money on the call side, 2 strikes out of the money on the put side. However, look at the price differential between these two contracts. On the call side, it's 192 is the bid, right? On the put side, it's 224. So basically a 30-cent swing just because it's on the put side, because of insurance premium, right? Because the big money's always hedging. Puts are always going to be a little more expensive. The put call skew is always going to lean a little more towards more expensive puts. This is normal It's something that you will usually see. In fact, you'll rarely see call skew. Call skew would be where calls cost more than puts. You don't see that hardly ever, only really on meme stocks usually. But 99% of the time, you're going to have the put skew where puts cost a little more than calls. Now, this is also important, liquidity and spreads. So look at this tight. What is it? So, bid-ask spread. We've probably all heard that. You probably heard that, but maybe you don't really understand what it is. It's pretty simple, actually. Like I mentioned, you have the bid, what buyers are willing to pay, and what the ask, what sellers want to receive for it. Now, that spread between these two prices, in this case, 274 and 276, is the bid-ask spread. It's only 2 cents. Now, we're looking at Apple here. Apple is always going to have a tight bid-ask spread because it's so liquid. And when you see tight bid-ask spreads, that means you're going to be able to basically get out when you want at a fair price whenever you want to, which is why Apple is a great ticker to trade, depending on your strategy. But we trade it every week in one of my services. Now, if you see a wide spread, let's go. I don't even know what EQT does. I just know that I don't know them, and they're not a popular company, and they don't have nearly anywhere near the volume of Apple. They're a less transparent. Again, the option market is a marketplace. EQT options are far less transparent than the marketplace for Apple options. Now, as a result, you can see that 37 cents is the bid, but all the way, right? Look at that. 53 is the ask. That's a 16-cent bid-ask spread. Now, if you're not a experienced options trader, you tend to want to stay away from this because you'll find that maybe on your P&L, it says you're up 50%. You go to exit. There's no buyers though. Why? Because there's not as much price agreement on what a fair price of this EQT option is. So you go down. Maybe you try and get out 30% gain. But no, you can't do that either. You have to go all the way down. Maybe you can only get out a 10% gain because of this wide bid-ask spread. The market does not have as much consensus on what is the fair price of that option. So it can be harder to enter and exit. Now, you can use this to your advantage if you're more experienced to get better fills, especially on the entries. But just be cautious of that if you're new. You will have to understand that what you're seeing on the P&L might not be what you can actually get when you go to close out the trade. A good rule of thumb is to look for penny or nickel spread. So anything from 1 to 5 cents is considered a pretty tight bid-ask spread. Fairly liquid market, should be easy to enter and exit at the price you want. Whereas if you go 16 cents, 20 cents, sometimes you'll see 50 or 50 cents or something. That's going to be a more difficult trade to execute to max profit and succeed on. So to sum up some of the common new mistakes people make when they trade options, the first one is confusing volume with open interest. Again, open interest, if you go to a chain and you see 5,000 contracts of open interest and you're like, wow, there's a lot of activity happening. No, because why? That was yesterday. The same thesis that made those contracts be traded yesterday by people might not be true today. Instead, you want to look for the volume spikes. Was 200 contracts traded yesterday? So 200 would be the open interest. And now 5,000 contracts are being traded today, which would be the volume. That signals something could be coming a big, strong directional move potentially, right? The second mistake is ignoring IV crush around earnings. Again, just be cautious. You have to have basically a larger than expected move to overcome the theta crush, right? Or not the theta crush, sorry, the IV crush after earnings. Because IV is going to eat away at that option the minute it collapses. And to compensate for that loss, you're going to have an enormous move to win on just a long call or a long put. The third big new mistake is trading illiquid contracts with huge spreads. Again, it's just because, if you're more experienced, you can do it. But just if you're newer, just try to stick to the liquid 1 to 5 cent bid-ask spread options. It's going to make your life a lot easier and less stressful. And the last big noob mistakes, I talked about how, if there's a 15 delta, right? Or let's say because that would be a low, if you're just playing calls and puts, that would be a low probability of profit. Let's say you take one with a 75 delta, which by proxy, in the money proxy, would mean you have a 75% chance of that contract being in the money at close. Well, guess what? It doesn't work like that. Just because it has a 75% chance doesn't mean it's actually going to work out, right? It could always go the other way. A 75% chance of profit, a 90% chance of profit. Doesn't really matter. At the end of the day, the trade could go your way or it could not. You have a 50-50 shot of it working, basically. But you can use delta to make more structured trade decisions. It does matter, but I'm just saying that it's not a guaranteed profit when you're choosing your delta. So that's the sermon.
That's awesome. Great stuff. We had a number of people saying this is really good information and looking at it in a way that maybe they hadn't looked at it before.
Awesome.
So really appreciate you going through all that. You mind sending me the slide deck and I'll put it in our opening playbook and closing playbook members area?
Absolutely. I'll shoot it to you right cool. After this.
Yeah, awesome. All right, well, folks, if you missed any of that or want to just absorb it better and see it again, there is a replay link down below in the announcements, the recent replays, and you can get it there. Of course, Alex has his Sunday night session coming up this Sunday at 7 p.m. Eastern. The link for that is pinned at the top of the chat, and you can get that. And
we'll be doing more trainings on all the option stuff as we launch this scanner, so everybody knows. This is just the tip of the iceberg, but this is great because you're going to be spending a lot of time in it. So, hope you enjoyed.
That's awesome. Thanks so much. Working through these options chains to find exactly the right expiration and the right strikes with the right risk reward, you can tell how much work that is and how time consuming that is to do manually. And that's one of the reasons that Nathan built his income machine, is because it does a lot of that research for everybody. And, it sorts through millions of combinations on a single stock to figure out which combination sets up the best trade. And it does that for us in real time, automatically. So if you want to basically be able to kind of automate what Alex just went through and you don't have the income machine, it's a great way to do it. So we're going to go ahead and play a replay of that presentation for you here. So you have an opportunity to get in on the income machine that implements a lot of what Alex just went over. And we'll take it from there.
Now, the trades expressed today are based on signals from the income machine with the benefit of hindsight. Now, my guest has been able to use this tool with a great deal of success in his own signals. A lot of them he shared with you guys, with a 93% win rate so far on those closed trades and a profit factor of 4.92. Pretty darn good. Now, you guys know there's going to be winners and losers along the way, so don't get too excited about any single position. And every example today is based on a $2,500 starting stake unless otherwise stated. However, the average position is right around $100 to $200, so you don't need to start out big. Now, the stories shared today were from real people who submitted their story for us to showcase. We did not meet with anyone one-on-one or advise their situation, as we are publishers